There are many benefits and advantages of trading Forex. Here are just a few reasons why so many people are choosing this market over other markets. First of all, there are no commissions. There are no clearing fees, no exchange fees, no government fees, no brokerage fees. Most retail brokers are compensated for their services through something called spread. And remember from an earlier section, spread is just the difference between the bid and the ask price. Next, there's no fixed lot size. In the future markets, lot or contract sizes are determined by the exchanges. In Forex, you determine your own lot or position size. This allows traders to participate with accounts with very small initial deposits. Next, Forex has low transaction costs. The retail transaction cost, or the bid-ask spread, is typically less than 0.1% under normal market conditions. For larger transactions, the spread could be as low as 0.07%. Transaction costs are so much higher in other markets. Next, the foreign exchange market is a 24-hour market, meaning there's no waiting for the opening bell. From the Monday morning opening in Australia to the afternoon close in New York, the Forex market never sleeps. This is awesome for those who want to trade on a part-time basis because you can choose when you want to trade, whether it's the morning, noon, night, during breakfast. With stocks, the market closes at the end of each workday at 5 o'clock, which is why it's really hard to trade stocks if you have a day job from 9 to 5 or any time during the day. The next really nice thing is that no one person can corner the market. The foreign exchange market is so big and has so many participants that no single entity, not even a central bank, can control the market price for an extended period of time. We talked in the last section about centralized versus decentralized, and in a stock market, for example, which is a centralized structure, the market can be easily cornered since all transactions go through that specialist. Another just unreal thing about Forex trading that you cannot find in other markets is its leverage. As we talked about, in Forex trading, you can leverage a small deposit and control a much larger amount of money. This leverage gives you as the trader the ability to make nice profits and at the same time keep risk capital to a minimum. Remember the example we talked about with a 200 to 1 leverage? That means that if you have $1,000, you could literally trade 200,000 units with that. That's amazing, isn't it? Another nice thing is the high liquidity. Since the Forex market is so big, it is extremely liquid. And this is very advantageous because it means that under normal market conditions, with a click of a button, you can instantly buy and sell, since there's usually always going to be someone to take the other side of your trade. So you're never going to be stuck in a trade. This can happen quite a bit in like the stock market where you really want to take a trade, you really want to buy, but you just can't because there's no one to take the other side. That'd be pretty frustrating sitting there clicking the buy button a million times and nothing happening, right? The last thing we're going to mention is the low barrier to entry. When you compare Forex to stocks or options or futures, it doesn't take a lot of money at all to get started in Forex. Like we've talked about, you can start with as little as $100 if you wanted to. Whereas with stocks and futures, you need a lot more money to make significant profits. Another thing to point out is there are like 2,800 stocks listed on the New York Stock Exchange and another 3,100 that are listed on the NASDAQ. So which one would you trade? Do you have a ton of time to stay on top of all these companies and what's going on in thousands of companies? Probably not, right? In Forex, there are dozens of currencies traded, right? But the majority of market players trade the 4 major pairs. It's a lot easier to keep track of just 4 pairs rather than thousands of stocks, right? So as you can see, there's so many advantages and so much opportunity for you trading Forex as opposed to trading stocks. We decided to put this section in our education because a lot of times when people hear about trading, they think stocks, they don't think Forex. And so as you start trading, as you start learning, I want to make sure that you understand that Forex is different from stocks. And as you talk to other people about how your trading's going, and maybe they talk about trading stocks and not being successful, well, Forex is a completely different market. It's really hard to compare your success in stocks and Forex because they're just so different from each other. So the good news is you're trading in Forex, and as you've seen, Forex is an outstanding market to get started in. So it's worth the time studying all these sections, learning all this, and applying all of it, and practicing everything that you're learning here so that you can be a successful trader in the Forex market. So that's the end of the second module. If you understood everything from the second module, go ahead and move on to the third module. If not, go back and review specific sections that maybe you didn't quite understand, and we'll see you in the next module.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.